So let's take a look at CRSR, Corsair Gaming. So we did have and report earnings today. Earnings actually were not that bad. What I'm going to start off showing you is the daily chart, the daily time frame. Today we were up 5.5%, just about $1.13 on the day. We did close at $20.42. So before I get into the earnings and I get into what it kind of did after hours, let's kind of look at where we are on the daily chart before earnings. Let's kind of assess the price action before earnings. So today was a very, very good day for the stock. We did reclaim the 10, 5, and 20-day moving average. You can see here we are coming into this 50-day moving average right around this $20.78, and we were rejected today intraday. So with that being said, if I pull out my drawing tool here, you can see this red line that I'm trying to go over here in blue. We've been kind of teeter-tottering here ever since we lost it back in September. As soon as Corsair Gaming lost a 50-day moving average in September, this is, and you can kind of speculate and call it what you want to, but you can kind of say that, like, the narrative that I've seen is that, short sellers this and short sellers that and short sellers this and, hedge funds and, manipulation and all this other crap. Guys, you have to understand who you're getting your information from. First off, who are you listening to? If this is a long-term investment, then don't look at the chart. If you plan on holding Corsair for 3 to 5 years, then why talk about it every day? Then why check the stock price every single day? It really doesn't matter what we're doing intraday, right? Because if you believe that the fundamentals of the company are that solid, that strong, you believe that earnings are going to be great, you believe that, everything is going to kind of pan itself out, then what does it matter? Come back in 3 to 5 years and look at your investment portfolio, because I'm going to make something very, very clear. If you are a long-term investor, but then yet you're complaining about where the stock price is now, no one says you had to hold the stock. Depending on what your average price is, for example, if you just learn a little bit of technical analysis, you have to actually look at the sticks. You have to actually see what it is that's going on with these stocks on a technical level. A lot of times it's not just, oh, what are the suits doing? It's attack on retail. It's, small caps this, and it's, none of that stuff matters. Take a look at the chart. I'm just going to go back here to around August. Let's say your average price on the stock is anywhere between 30 and let's say $28, $25, $26. Okay. While we're trading over this area, if you follow technical analysis, you know that losing the 50-day moving average is a big deal. Like, that's the start of a big deal on a stock. If a stock tries to 1 time here, 2 times here, 3 times here, tries to reclaim the 50-day moving average and continues to get rejected, then why continue to hold a stock? Why not flip your bias? If you're looking for a trade, you're looking for a shorter term investment, why not flip your bias, go to short? You could have essentially been riding this stock down for the past 4 to 5 months. Now, I understand some of you guys love the stock. You believe in the stock, which is fine. I'm not a holder of Corsair Gaming. I have day traded it a few times. I have no bias, bull or bear. Okay. I'm just a realist. I just kind of trade what the market is giving me. A lot of times I'm spending a lot of my energy in mega cap tech stocks, Apple, Tesla, Amazon, so forth and so forth. But the point that I'm trying to make is that if something like this in your portfolio is really, really hurting, okay, and you're claiming that you're a long-term investor, meaning you're looking for a hold time of 3 to 5 years, this shouldn't be affecting you if you believe in the fundamentals, because your portfolio should be managed in a correct manner to where, yes, maybe this stock is down very, very significantly. I mean, we're down, extremely, like, if you just look back the last 5-6 months, I mean, we're down 50% on the stock from $30 to $15. The stock's down 50%. So if a move like this is frustrating to you, then why not have exited the stock? Why not have diversified your portfolio to kind of play stocks that are going to, even this out? Okay. So the point that I'm trying to make is that institutions are not picking on retail. Institutions are not shorting this stock because whatever, you're looking for a massive short squeeze. I understand that, a short squeeze can happen when the stock price starts moving up and shorts have to kind of cover, institutions get caught. But this is not 2020 anymore. This is not GameStop. This is not AMC. There's a whole different thing that was going on with those stocks, amongst other stocks, big pump and dumps from big Discord communities or YouTube channels or whatever. Hedge funds and institutions also had a play in those run ups. If you think that it was just retail traders versus the institution that got shorted out, you're completely mistaken. It was more of a battle between one institution shorting the stock very heavily versus another institution that was playing along with retail to run the price up, squeezing the other institution, kind of like a little battleground between fund and fund. With that being said, if we take a look at the price action, we've been rejected at the 50-day moving average multiple times over the past 3 to 4 or 5 months, okay? Every time we come into this area, we get rejected. Every time we come into this area, we get rejected. Every time we come into this area, we get rejected. Here we are again into this area. Do we consolidate here? Do we continue to trade sideways? Or do we finally break out? If we do finally break out, we got a clear shot. Let me kind of show you here. We got a clear shot to the 100-day simple moving average as well as the 100 EMA. Those prices are going to be around $23, $24. Next area is going to be the sloping down linear regression. That's going to be your next supply zone. $24 is going to be your next price target. But I think as soon as it breaks over the 50-day moving average, things can get very bullish on Crsr. Now, if we just look at what's going on here in the after hours session. So the immediate reaction was a big ramp up, okay? Followed by a huge sell-off, okay? Now, what exactly is going on here? I don't think any one person can particularly tell you. We all have our ideas. We all have our, kind of like our thesis of what this could potentially be. This could be potentially an institution unloading a lot of shares, unloading more shares than what retail and smaller investors can buy up, which is going to cause the stock to dump. Could it be to protect their short positions? Absolutely. But you have to look at the bigger picture here. Right now, what's going on in the overall market, you have growth and speculation stocks being sold off. You have value stocks like the Dow, the quote unquote boomer stocks, the high paying dividend stocks, the boring stocks that don't move intraday, the stocks that are not going to the moon. Those particular stocks, oil, some of your gold, some of those inflationary type plays and hedges against high growth and speculation is where the money flow is starting to flow. Now, don't get me wrong. The Dow Jones Industrial was underneath the 200-day moving average as well as the 50-day moving average as well, but they've also been the first to reclaim that area and kind of working their way back up. The point that I'm trying to make here is that if you're looking for a big move in the stock like next month, it might not happen. There's a lot of pieces to this puzzle that need to get played out. So I did draw a line. We did run all the way up to $22.02, and we put in this low here at around $18. If we kind of look at where this low correlates, this low is going to go all the way back to 2 Mondays ago, where we kind of hit this little bottom here. There was a little bit of demand here. We ramped up. We came back down, tested this area. We ramped up. Now we kind of traded in the middle of the range, and now we started to ramp up again. What we're looking at going forward here could be just a little bit more distribution, could just be a little bit more chop. I think that there's more time to be spent down here at these lower levels on Crsr. If you are a longer term investor, I'm not saying that the stock is going here. Just understand that if we do start to lose this $17 range, okay, these recent lows, it has room to slide into 15. If we want to get bullish on the stock, we need to see a change in momentum. And that change in momentum is going to come as soon as we can reconfirm the 50-day moving average. Now, I'm not saying that, hey, we reconfirm the 50-day moving average and everything goes back to the way it was and we run up to these highs here of $42. That's not what I'm saying. We're still trading below the 200-day moving average. The 200-day moving average is sitting at 26. If we kind of see where this correlates with all of this price action going back to June and July. Okay, so this is also going to act as a level of resistance in this zone and could spell a lot of chop. What could also happen here is you can see a quick reclaim of these levels, quick back test, another spike up to the 200-day moving average, could chop around, lose this zone, test this area right around $22, and then start to ramp up. But as soon as we get back into this $32 area, you could expect this chop cycle to continue. And in fact, let's say we do go into some type of recession or even bigger correction towards the middle end half of the year, you can completely see this run up where everyone's going to start buying in here and here to see it, the market do this. Okay. Now, I'm not saying that that's what's going to happen, and I don't want that to happen. Of course not. Like I said, I'm not a long-term holder in anything. I'm just a day trader. I scalp options, predominantly mega caps. So for me, the volatility is good. I would like to see a trending market, whether that be bull or bear. It makes things a lot easier. Right now, there's a lot of distribution going on where stocks are going up in the up intraday, down intraday, up intraday, down intraday. It's a little bit harder to catch the moves. It's, versus when things are trending up, you can kind of have easier, clear plays, and things are trending down, whether that be a bull or a bear market. It's just a lot easier to make money shorting and or longing those stocks. But just kind of taking a look at what's going on here with Crsr Gaming, guys, I understand there's a lot of pain. I understand a lot of you guys have been holding this stock for quite some time here, and you guys do feel the pain. But the thing is that I kind of want to emphasize is that no one's forcing you to hold these stocks. Like, if you just learn a little bit of basic technical analysis, when we start to lose, when we're chopping around the 50-day moving average, we get a quick pump. This is clearly a pump, guys. This is not natural. This is not organic, okay? So a lot of people who like to complain about short selling and hedge funds and stuff like that, do you guys think that this is natural organic buying? Yes, there's a lot of retail traders who are trying to get in on this move. But this is not just retail traders buying a stock because they think Crsr Gaming is going to, be a $500 stock. I mean, this is a lot of people just chasing a pump. When it does come back down and loses the 50-day moving average, this is the line we have to respect. There's only two lines if you're a long-term trader that you really need to respect. That's the 200-day moving average. That's the 50-day moving average. If we take a look back to the dot-com bubble, there's so many stocks from the dot-com bubble that no longer exist. There's so many stocks that got hit very, very aggressively that fell below the 200-day moving average. Guys, 22 years later are still not above the 200-day moving average. Now, am I saying that Crsr will never get above 26? Am I saying that it's never going to get above the 200-day moving average? Of course not. Anything can happen at the drop of a hat. We can have consolidate a little bit after these earnings, things settle, inflation goes down, interest rates, all this other stuff in the world gets better. And then we can see, small cap season start to take this level out. I could see Crsr revisiting $30, $35 this year if market conditions kind of, permitted that. The thing is that the point that I'm trying to get across is that if you're a long-term investor and you're going to hold the stock for 3 to 5 years, then just continue to average down. If you really believe in the stock, just continue to average down, okay? There's going to eventually be a bottom, because if there's not a bottom, what's the alternative? The company is bankrupt and the stock is no longer on the exchange, okay? So if you do not believe that the company is going bankrupt and you do not believe that this will turn into a penny stock, which I'm not saying that it is, I'm just using these hypothetical analogies. If you don't believe those two things and you do plan on being in the stock for 3 to 5 years, then every significant dip average down. Now, this is what not to do, okay? When I say average down, that doesn't mean we had one red day average down. We get a run up and then we get a red day average down. No. That means when we make a new low. So like when we consolidated here and we made this first low, I would average here. When we made this run up, I would try to cover a little bit of position, get some cash flow, still keeping your overall position. But when we came down and made a new low, I would average down. Okay, so this is 2 average downs in the past 6 months. Then as we started kind of just drifting and now it looks like we're turning around, I would definitely want to add one more time here in anticipation of a run back up. It's really sad to see what they did on earnings. I know a lot of people were expecting good things. But if you are long-term bullish on the stock, the best thing you can do is every new significant low is to average down and not look at your portfolio. Check your portfolio every quarter. Check your portfolio, once a year. I mean, I'm not saying to never look at your portfolio, but looking at the stock price each and every single day is going to do nothing for you. Now, if you're a short-term swing trader, or a day trader, or you're looking to, maybe buy these lows here, right? Maybe you're looking to buy these lows here because maybe you want to sell at 23. Maybe you want to sell at 25. Then yes, you need to monitor the price action on a day-to-day basis. As long as we are holding over $17, I would continue to hold the trade. So even though earnings did do this big whipsaw, okay, currently in the after hours session trading at $20. So we are still over that $18 area. Until we lose this lower linear regression level, until we lose $18, just continue to hold the trade. Because even still, with the big up and down that we had, you have a low here and you have a higher low. So this can completely consolidate and put in a higher high, followed by a higher low. This would still mean that the stock is trending up. I hope that makes sense. Guys, if you want more information, you guys want to day trade a little bit, you guys want to swing trade a little bit, you guys want to learn about options, definitely check out my website, evolutiontraders.com. Come to my Discord. That link is down in the description box below, and definitely want to subscribe to my channel as I do multiple technical analysis videos, kind of giving us ideas and levels that we can trade, whether you're a day trader, scalper, swing trader. Not so much going to focus on the longer term investor, just due to the fact that there's a lot of moving parts when it comes to fundamentals and numbers and sales and all that stuff. That's really not my game. I don't specialize in that. I make my living paying the bills, day trading and scalping intraday moves, weekly moves, momentum, trends, this, that, and the other. Predominantly, I'm going to trade mega caps, so I'm not really going to be focused on a lot of small cap stocks. Although when the opportunities present themselves, which they have not in a long time, unless you're just consistently riding a short position down, which I don't really trust doing that in these market conditions, because if I'm playing options, weekly options, bi-weekly options, monthly options, and I get one, uptick in the futures market in the pre-market session, and these things can completely crush me. So I kind of stick to what, big funds are trading on a day-to-day basis, which is going to be your big institutional, darlings of Wall Street, the Teslas, the Amazons, the Nvidias, the AMDs, these big mega cap stocks that tend to follow technical analysis levels better intraday than a lot of these small stocks that really don't move that much. You kind of have to be sitting in them for a while before you can kind of see those gains. The only difference is that, if you don't trade options, you really can't, and you have a smaller account, you really can't afford to buy, a ton of Tesla, but you can take the same $5,000-$10,000, put it into Crsr. This thing can have a 15-20% day and you can make a pretty penny. But the only thing with that is you do have to be sitting in these stocks for a little bit. You do have to kind of endure this pain that you guys have been on, this emotional roller coaster. So with that being said, guys, I will catch you guys all on the next trading recap video.